Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, 𝗬𝗍𝗿. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
Right, legends, welcome to another live stream here on a lazy Sunday afternoon in South Africa. Okay, 2:15 in the afternoon, lazy Sunday afternoon here in South Africa. I thought, the price is dropping. Altcoins are once again bleeding here to the downside. We had a little bit of hopium in terms of, maybe we could get that old rally finally, some of them breaking trends. And I looked at Ethereum this morning. I was like, whoa, what a fake out. What a fake out we had here on Mr. ETH, breaking this little trend, okay? Breaking this little trend, and it even had some high time frame candle closes above, but then it created a double top and said bam to the downside. From a day trading perspective, it was actually a nice little profit-taking area. Okay, you play the breakout, or you, and you take profits by the highs, right? And then, once again, the lesson, you have to pay yourself, because this market is here to surprise us. That was a resistance area. Okay, you can see how price struggled to break through this level. Once again, ETH struggled to break through that level, found acceptance back below the trend, and now we're back at the 0.786. Okay, when I take a fib from the low to the high, we are now back here at the 0.786 on Ethereum. And as long as Ethereum, okay, I'm still in the camp of as long as Ethereum can hold $3,000, there's a chance that this was the first fake out. And usually when you have a major trend to the downside, it is quite common to get at least one fake out before the true breakout. So maybe that was the fake out. It's going to try again, and that will be the true breakout, or it's going to tap the 0.88 over here, and it's going to claim the low and bounce here on the support area that I have in mind. Okay, this is the support zone, $2,700. Let's see how it's going to play out for ETH, because I know a lot of people want technical analysis on Ethereum, so just quickly wanted to dive in there. But what is happening here on the price of Bitcoin? Also, okay, it's not looking good here at the moment. If I'm looking at this structure over here and I take a fib from the low to the high, we have tapped, okay, we have tapped, guess what, the 0.88. It ain't looking great here at the moment, because you do increase the probabilities that once you tap the 0.88, you're going to claim the low. Right, legends, we will analyze the probable technical scenarios that could play out based on the price action that I see here at the moment. How low could we go? Well, we will go and assess that probabilities from a technical perspective. Is there a chance that Bitcoin can do this? We will assess the probabilities also here from a technical perspective. So let's get ready for the week. Let's see what we could potentially expect. And remember to smash up that like button, okay? Here, bringing you alpha on a Sunday afternoon, right? So all you can do to help me out is to give that like button a gentle tap on your phone, or click it with your mouse if you're watching on a PC. Right, legends, welcome to the live stream. Let me go through some more comments. Remember to hit the likes. Yes, Lucian, thanks for joining. And yes, remember to hit the likes. How many likes do we have? 32 likes, 124 people watching. No chance in hell crash starts tomorrow. Okay, we will go and assess that probability in a moment. I do have a scenario that at the moment carries high probability that we are not just gonna do this, okay? I do think that there's a low chance for price just to fall here to the downside and come and claim the low at $89,000. Yes, the market is here to surprise us, but I do still think that this scenario carries lower probability. There's another bearish case scenario which I'm keeping an eye on, and that scenario is starting to gain in probabilities based on the price action that I see here at the moment. It would be very strange also, okay? It would be very strange for price to find support at a 0.88 level, not impossible, and just rampage here to the upside to go and claim the high again at $110,000. So which scenario am I then looking at? Okay, Peter, welcome. We got another 20% crash. I might even go all in, you know, right. Dips are made for buying in a bull market. That's what they say. But, you know, what are the high probable scenarios? We will go and analyze that from a technical perspective and also align that with confluence and build a trading plan. My trading plan here to the bottom has still not changed, and I do think that that scenario perhaps for now will carry higher probabilities. Right, legends, let's get into the technical analysis. Remember, if you'd like to come and trade with me, that's where I do all my day trading. I have pinned the comments here in the comment section above weeks, okay, where you get 50% discount on your trading fees, and all you need is an email and a password to sign up. Also, you get up to 20K sign-up bonus, and also your way to support the channel where I bring you the biggest deals from these exchanges. I know that they've also successfully burned 4 billion WXT tokens. So if you are a WXT token holder like myself, okay, there's no affiliation. I do not benefit in any way by you holding those coins, like I said on Friday. Just interesting to see that it is a deflationary token. Right, legends. Now, what are the probabilities here at the moment? I was looking at the structure here at the this morning, and first thing we have to notice is if I take a fixed range profile for this entire consolidation area that we have been in, when price rejects at the value area high, it increases the probabilities. If you're not going to find support at the point of control, you're most likely coming down to the value area low. Again, it break back up, found support at the point of control, failed again, bounced on the point of control, and we've just been ranging in here, okay? Also failed to break the bottom. That was the last low that we've made over here, that where we basically swept up all of the liquidity. And now the question is, this damn structure here to the upside, it can be counted as a 5-wave structure, but it does count better as a 3-wave structure. And a 3-wave structure is not really what you want to see for bullish momentum to continue to the upside and for the bull market to keep on rampaging to the upside. This, okay, does count better, unfortunately, as a 3-wave structure. And a 3-wave structure is usually a corrective structure, and it's not an impulsive structure. Impulsive structure is that 1, 2, 3, 4, 5, ABC, and it just continues. Strong impulses, volume supporting the momentum to the upside. You want to see more green volume kicking in. And, okay, the one thing that I've also noticed is let's just wrap up the value area high over here is we've now failed miserably. Okay, and we now have acceptance back below the value area high, which tells me purely from looking at this from a range perspective is the next level is the point of control. If you lose the point of control, you're most likely going to the value area high and most likely going to claim that low over there. Okay, so from a higher time frame perspective, it ain't looking good. Okay. I know that there are still some people speculating that this is an impulsive structure, this is part of the corrective structure, and we're just going to rampage here to the upside. And I will discuss that probability, and we will go look at the waves inside of the structure to see, well, is that a possibility and can it still play out? Okay, what are the chances? Is it a 20% chance, a 30% chance? Okay, legends, the other thing that I'm keeping an eye on over here is to say that, well, this is a scenario that I want to highlight over here. Okay. Just want to put the Y wave over there. This scenario for me is starting to, I want to say it's starting to carry lower probabilities, but it still has higher probability than an impulsive structure. And what I mean by an impulsive structure is because the movement here to the upside, okay, looks more like a three-wave structure in a W. You know, you can count it on as a five-wave structure, but you have to force the count. And I don't like to force a count because then you're desperately trying to make something work. Okay. Where from a simplicity perspective, well, if it looks like a three-wave structure, it smells like a three-wave structure, it counts better as a three-wave structure, well, maybe it's a three-wave structure. The difference between an impulsive structure, a five-wave, and a three-wave structure is that a three-wave structure is a corrective structure, which means that you can form another three-wave structure to the downside and create another three-wave structure to the upside, where you reject and you fall back to the downside to come and claim the low. So this bearish case scenario still carries higher probability than us finding support. Okay, this is what I mean between the bearish and bullish case scenario. Even if we still find support over here and we go back up in another three-wave structure and we reject over here, there's a high chance that you're going to come and claim the low at $89,000. It is a fake pump. It is not a bullish pump. What you would like to see from an impulsive perspective is a nice 1, 2, 3, 4, 5. Okay, a beautiful ABC corrective structure, and then you get 1, 2, 3, 4, 5, ABC, 1, 2, and you carry on with the bull market here to the upside. Okay, so from a bullish continuation perspective, I think that this scenario still carries higher probability. Right, 96, 101, 94. The price has to dip again if the cycles are correct. Everything is still on time. Yes, Peter. Okay. There's another scenario that I think, okay, might be proving itself to carry higher probabilities than this scenario over here. Okay. And it's usually a scenario that really tests people's patience. Either what the market makers love to do is that, you know, they give you that quick up move, the quick down move. It's over, done with, and we continue to the upside. It grabs all the liquidity above, it grabs all the liquidity below, it resets the funding rate, it basically wipes the slate clean again, and then the bull market continues here to the upside. But I have a hunch that this move, if we successfully get a rejection inside of here and we start a 5-wave impulsive move to go and complete the C wave here to the downside, it's absolutely going to obliterate the altcoin sector. So based on that thesis, okay, there's another scenario that I think could potentially be playing out that carries higher probability than this scenario over here. And it is the following one. Bam, there we go. This scenario basically means that we do not claim the low, but it is going to require a little bit more patience, because perhaps we are building a ending contracting diagonal to the upside, to the downside, in an A, B, C, where the C wave is basically ending in a contracting diagonal, of which all the waves has to be 3-wave structures. Now that to me looks like it's a higher probability, because this structure here to the upside does count better as a 3-wave structure. Then we have another 3-wave structure. Then we have another 3-wave structure. And now we're building potentially another 3-wave structure to the downside. Like I've mentioned, we've already tapped the 0.88 over there, which confirms, okay, which increases the probabilities that we're most likely going to claim this low. So what if, you know, we claim the low, we go back up, we tap the trend in a 4th wave, and we go back down. And this scenario, what I like about the scenario is that it also aligns beautifully with confluences that I have between the low and between the high. Okay. all the scenarios that I've just shown you guys, especially that B flat here to the upside, okay, also has a chance of playing out. But it is starting to lose probabilities at the moment, especially if we are going to claim this low, okay. This B flat scenario here to the upside is lowering in probabilities, especially if we claim the low, which it looks like it's imminent, right? It looks like the low is almost going to be claimed here to the downside. Right, legends. Now, you might be asking yourself, well, Dewald, why does this structure carry higher probability, and why do you think that this counts better as a three-wave structure to the upside? Okay, let's dive into that structure. Let's go on to the 1 hour time frame, and let me show you what I'm seeing on the chart. And remember, guys, this is pure technical analysis. It's not because I feel like it and so forth. Right? When I take a fib extension, so if I'm looking at the structure from a three-wave perspective, where this was the high and this is the low, very simple. I take a trend-based fib from the low to this high to the low, drag it across, and you can see where we got the rejection, 1 to 1. It is a beautiful three-wave structure target. It tapped it to perfection, where you basically have 1, 2, 3, 4, 5, a three-wave structure down, and then you have another 1, 2, 1, 2, 3, 4, 5. Okay, or 1, 2, 3, 4, 5. Okay, but basically a 5, 3, 5 here to the upside. But I do like however you count the structure, because corrective structures are very difficult to count. Okay, however you count the structure, it could also be a W, X, Y. Okay, it actually counts better as a WXY here to the upside. But what's important, the thing that I want to highlight from an important perspective is that if you count this as a three-wave structure like such, it does balance beautifully from a Fibonacci perspective. And fibs are usually those little clues that gives you, well, that gives you the clues in terms of, well, if it looks like a three-wave structure, it counts like a three-wave structure, it rejected from a Fibonacci perspective at a three-wave structure target, then maybe, just maybe, it is a damn three-wave structure. It is very difficult to count this as a 1, 2, 3, 4, 5. Okay, then this becomes very complex. This corrective structure becomes very complex, because if this is a 1, 2, 3, 4, 5, which now again you have an extended first wave, then you have a third wave, okay, with very little volume. And your third waves usually has the most amount of volume. And then you have this tiny, teeny, weeny little fifth wave here to the upside. Okay, so let me paint this out for you guys. So you can count this as a 5-wave structure, but you're forcing the count. So where was it? 1, 2, 3, 4, 5. So I can count this as a 5-wave structure. Let me just make that a little bit bigger so everyone can see the numbers properly. Okay. First thing, you have an extended first wave. Extended first wave structures is a rare structure. Okay, so now now this is a rare 5-wave structure to the upside. The only concrete rule is that your third wave is not allowed to be the shortest, and it's not the shortest. So you can make this work somehow. The second problem over here is when I take a time fib from the low to the high. Okay, so if this is a valid extended first wave, which is now already rare, this low was also made before the 382. So there's now a couple of things starting to count against the 5-wave structure. So this is what I mean. Now I'm forcing the 5-wave structure. I have a low that was made before the minimum target. I have an extended first wave, which you don't often see from an impulsive perspective. I have this eeny weeny tiny little third wave that is at least not the shortest. And then I have a fifth wave here to the upside that is very difficult to count in a 5-wave structure move. And then if this is the impulse, okay, look at how long the corrective structure is taking. Look at where the impulse started. Look at where it ended if I'm counting this as a 5-wave structure. And look at how damn long the corrective structure is taking. It feels like this should have been the end, maximum, and then we should have built impulses back to the upside. Now, the fact that we are so close to this low tells me ain't no more 5-wave structure here to the upside. It counts way better as a potential 3-wave structure, okay, where we've hit the 1-to-1 extension over here. Right, so legends, let me just take the noise here out the chart. So I hope you guys get the picture that I'm trying to paint over here. Is that, yes, you can count 5 waves. It's just not beautiful, okay? It's not sexy. It really does count better as a WXY, where you basically have a flat. You have a 3-wave structure in W, you have a 3-wave structure in X, and you have a flat, okay, in Y. It follows all the rules perfectly. Nothing has been invalidated from an Elliott wave perspective. It's hit the 1-to-1 extension for a Y wave, which is a very common target. So I'm just like, okay, it must, okay, let's give it the probability that it is a 3-wave structure rather than a 5-wave structure. Then what? Well, if this is a 3-wave structure to the upside, because the momentum, okay, if this is a 3-wave structure here to the upside, and this is, it really counts beautifully as a 3-wave structure, a 3-wave structure here to the downside to complete a wave 1, okay, the rule, okay, when you form a diagonal, a contracting diagonal, so when you have a diagonal, whether it goes up or whether the diagonal goes down, okay, if you form 1, 2, 3, 4, 5, and this wave starts with a 3-wave structure, every wave has to be a 3-wave structure. So you have to have a 3-wave structure down, a 3-wave structure up, another 3-wave down, another 3-wave up. And then you complete a 1, 2, 3, 4, 5, A, B, C, and you continue momentum in that direction. The same thing with a diagonal that runs to the downside. Exactly the same rule applies. Okay, because you have formed a 3-wave structure to the downside, which now means that every move must be a 3-wave structure. And boy, oh boy, does this look like a 3-wave structure in 2 as well. So we have a 3-wave structure in 1, we have a 3-wave structure in 2. Well, you know, we're potentially forming a 3-wave or a 3-wave structure here in 3. 3-wave in 4. Okay, and it's usually when we create the 4th wave and we start rejecting, that is when I like to talk about contracting diagonals, because once the 4th wave is in and you reject, the triangle or the contracting diagonal to the downside starts carrying much higher probabilities. So you can see that we are still in the formation of the structure, and there's still a lot of things that can happen to invalidate the structure. But based on what I'm seeing here at the moment, it kind of looks like this is the structure that carries the highest probability at the moment. Okay. So from a trading perspective, okay, what I'm now looking at is the following. Let's switch this back on. Let me just put the Elliott waves off here. I don't need that. I'm just interested in the boxes that I have to the downside. Okay. So first box is when I take a fixed range of this entire range that we've been in, just to show you where I get my support from. The first box that I have here is basically the point of control. This is where I get this green box from, where the highest amount of volume was traded. This box I get from support of the highs over here, a long consolidation area, and a high volume node over here. Okay, now we can go and see, well, do we have daily, weekly levels and Fibonacci levels lining up with those levels? So I switch on my point of controls, okay, and then I can see, well, yes, this is where I have the point of control of the entire range. Let me just make sure that that is perfectly snapped up. And I don't really have confluence with this box. which makes me believe, well, perhaps that is where we're going to get the bounce, because the market makers love to give us that final bounce in a zone that no one is expecting. Okay. Right, I know it looks messy now with all the point of controls and everything over here, but I just wanted to show everyone where have I built the confluence. So now I can take this out the way. Let's zoom into this structure. Let me make this nice and big. Okay, now the first thing I want to do is I want to take a fib from the low to the high. And now we look for additional areas of confluence from a Fibonacci perspective. Okay, so you guys can see with this structure to the upside and this structure now to the downside, we have not tapped the 0.618 just as yet. So it would be very interesting to claim this low, find support by the 0.618 and also the highest volume node of the entire range. We also have this little consolidation area that can potentially provide support. So it would be nice to come down here, find support, and then grind back to the upside in a three-wave structure. In this consolidation area over here is massive resistance. We also have, I think, a point of control over there that I identified this morning. Yes. Okay. Just take that pen out the way. So I'm now trying, based on what I see here from an Elliott wave perspective, I'm building my trading plan and I'm looking for areas of confluence because that is what I do as a technical trader. So I will be paying attention to this level over here, a swing failure from the low. If price had to fall down here, it finds support in this zone and it starts trading back above this low. That's going to be a bullish sign. This is where I will be considering a long depending on how price reacts at this level. You want to see price slow down. You want to see it chop a little bit and find continuation to the upside and start trading above this low. I am not interested in a trade as long as price is trading below this level. I'm not interested, okay, because it could fall down. And then there you are, adding to your position until your account gets liquidated. That's not how I trade. That is not good risk management. Okay, you have to observe the price reaction and look for signs of strength. So what I also like now about the scenario is, what if we do find support over here? We start trading back above the low. Now we have another naked point of control together with this consolidation area where you could come back up in a three-way structure, reject again, and you take the low again. And then this is where this box, this green box, is very important, okay? Where you come down in another three-wave structure to complete the fifth wave, to complete the ending diagonal or contracting diagonal, and then there's a chance after you have completed this wave over here, there's a chance that we can continue the bull market to the upside. Also, from a timing perspective, I love that it's round about mid-Feb. Based on the waves that I've drawn out over here, I do like that it corresponds with 8, 10, 15 Feb, mid-Feb. Because I've always told people about, when they put a gun to my head and like, Dewald, when do you think the altcoin season is going to start? When do you think the corrective structure is going to be finished? My hunch has always been mid-Feb. From end of Jan to mid-Feb, I think that is when the craziness potentially can kickstart again. So this structure lines up, okay, with all of those scenarios. It lines up beautifully with confluences, it lines up with Fibonacci levels. And I mean, for now, legends, what I see here on the price of Bitcoin is potentially that this could be the highest probable scenario that's going to play out. Okay, smash up the like for the education over here. Wow. Okay, sweating behind this bright light. Got a heat like 80K there, 86 maybe, Peter. Yes, but that is in the flat scenario, okay? If you want price to come back to $86,000 or $80,000, we have to get a flat. It's the only way you're going to get there is in a flat. Okay? So I just want to, let me take all the noise here out the way. Right, let's look at the structure. Okay. If you're counting this as an A, B, and now we're forming a C here to the downside. So you're basically saying from where we are right now, we need to go down. We need to go and hit the 80K, you know, the 80s. We need to hit the 80s and we need to claim the liquidity below the low. Well, there's a problem. Okay, it's all just based on probabilities, is that whatever has formed over here is not impulsive to the downside. Okay, for a impulsive structure. So if this is, okay, let's play this out, because I'm you know, this is the devil's advocate that I play with myself when I look at these structures. If this is the end of B and we are now in the formation of a C here to the downside, let me just make this bigger so everyone can see. We make this the primary. Okay, if this is the scenario that you are expecting without claiming this high, there's a problem that I see. Okay, never in invalidation, it's just a problem. Once you have completed your B wave, you need to start forming impulses to the downside. 1, 2, 3, 4, 5. Now I need to count an impulse here for a 1, 2, and there's a problem. I cannot count 5 waves to the downside. Okay, let's zoom into the structure. So if this is the end of B, what on earth is this? That's not a 5-wave structure. And I can go even onto the 5-minute time frame. This is the problem that I see. Okay, let's go into that structure over there. So you have to count 5 waves here to the downside. So what you want to count is a 1, 2, 1, 2, 3, 4. Where's 5, 4, 5? Like, there's no 5-wave structure here. This is a 3-wave structure. Okay, you have to count 5 waves to the downside to create an impulse. If you want to take the low, you need to create an impulse. There's not a 5-wave structure here to the downside. This is the problem that I see. Okay, let's go back onto the 15-minute time frame. Also, if this is, okay, let's say for argument's sake, say I can count 5 waves. Dewald, I've managed to count 5 waves. Then you want to see, okay, a 1, 2, 3. Where's 3? 3, 4, 5. You want to go down. You need to form impulses. The structure is going sideways. It's overlapping. Okay, remember, and impulses, okay, impulses to the downside, you want to see 1, 2, 3, 4, 5. Most amount of volume in your third wave. 4 is not allowed to overlap wave 1. This, taking a fib from the high to the low, you at least want to see the 1.618 tap over here. Okay, then when you take a fib from the high to the from the high to the low to the high, 0.618. So I cannot count this inside of the structure. Just has to be said. This is where my conviction and this is where my probabilities come from, is that some people will then say, well, Dewald, what if this is a 1, 2, and we're now going 3? No, where's 3? Like, why did we stop over here? It's a very extremely, okay, 3. Where's 4? Where's 5? You had to take this low again. 1, 2, 3, 4, 5 doesn't make sense, because now you have an expanding triangle, which is rare and should only be used once all other scenarios has failed. So, legends, you might be leaning on the bearish side and it might look scary here to the downside, but okay, when price, okay, and this is usually what I look for, is when price rampages to the upside, okay, we bull market, everyone is excited, and price slows down and it starts chopping, okay, in order to confirm that price is just going to smash back down to the downside, you have to count impulses that's reversing the price. And if on top over here you see the following, you have a 1, 2, 3 wave structure or 5-wave structure to the upside, and then all of a sudden you see this 1, 2, 3, 4, 5 ABC. Yes, 1, 2, 3, 4, 5 ABC. Then now you're reversing, you're making lower highs, lower lows, lower lows, lower highs. You're also changing market structure to the downside in 5-wave impulsive moves to the downside. So I hope that makes sense. Love to educate you on the channel. Remember to smash up the like for the education. Mr. Gold Star, welcome to the live stream. Golden pocket retracement on one day. Okay, so I just wanted to explain to everyone, sorry, and I'm not hammering on everyone. I'm not saying that you are wrong. I'm just saying that this is a game of probabilities. And from a technical perspective, I need to go and assess based on what I see from the technical analysis and the structures and the waves. This is why I love Elliott wave theory. Okay, so from an Elliott wave theory perspective, it is very difficult for me to count an impulsive structure here to the downside. Very, very, very difficult. Okay, so can price do this? Yes, but it has a low probability. There's a higher probability that price is most likely going to do this. There's a higher probability that price, if it even takes the low over here, so let's say it takes the low over here, there's still a higher probability that price will do this and then reject in that B flat target above. So this scenario and this scenario carries higher probability based on the structures that I see here at the moment, where this one is starting to diminish in probabilities, but not impossible. Okay. Ooh, right, legends. So basically, from a trading perspective, how do I plan to trade this? Which I have highlighted is that when I look at the structure, because we are intraday day traders, and at the end of the day, like I tell our pro community, link down in the description if you'd like to join our pro community as well, where myself and Angie educate and do daily technical analysis as well. I do not care, okay? And this is the truth that I'm telling you guys over here. I do not care whether this is going to happen or whether this is going to happen. I don't care. I don't care if price is going to $200,000 or whether it's going back to $30,000. I do not care from a day trading perspective. What I care about from a day trading perspective is looking at my area of confluence and entering trades with good risk management, taking profits when we hit resistance or support to the downside. That's what I care about. I want volatility. And at the moment, the market is offering me great volatility. Okay. From a day trading perspective, and you guys have heard me say this often, because often I see comments, people are so obsessed about price going up. Absolutely obsessed. And then you get the bearish side where you get people that say, oh, bull market is over. We're going to $30,000. I don't care from a day trading perspective, because you apply your trading strategy with good risk management. You get in, you know why you're entering, you have good risk management, and you take profits. You get in, you get out, trade played out to perfection, and you look for the next trading setup. You don't care where price is going. You just want your trade to play out. So what do I mean by that? Okay, because a lot of people don't grasp that concept. You need to decide, are you an investor or are you a day trader? Because what I'm providing you here with is day trading. Okay, is that okay? Following, I have a plan. Once we swing failure from this low, I'm going to consider a long to the upside. Okay, that's my plan. For example, right. So my swing failure trading plan says if price dips, so I don't care where price is. I absolutely don't care where price is going to go. Okay, my trading plan says if price dips below and it starts trading above the low, that is a swing failure strategy that I can apply. I know where to put my stop loss and I know where to take profits when we start hitting resistance to the upside. So from a day trading perspective, I am looking at this as a potential trading setup. I want to get in with good risk management. As price moves in my favor, I want to protect my cash because the market is designed to take my cash, and I want to take profits as soon as we start hitting resistance. So I get in with good risk management, I get out. That's it. Successful trade. Tick. I have now made a successful trade for the day. Day trader. Okay. Successful trade for the day. I got in with good risk management. I knew why I was entering and I knew where I was taking profits. Now I look for the next trading setup. So potentially I'm going to look now for a short in these zones. So price comes back up. I start taking profits from my longs. It rejects here above the highs. Maybe it rejects here above the highs. I know where to put my stop loss. I enter. Price is trading below my level. And now when we go to the downside, well, we don't have much support to the downside, but I will definitely be taking profits here at the low again. Price falls down, I take profit. Now I have a long trade, I had a short trade. I'm a bull bear. I don't care where the price is going to $200,000 or where it's going to $30,000. As an investor, you care. As an investor, buying up the dips and holding on for the next 10, 20 years, depending on what your investment horizon is, you want price to go up because from a spot perspective, you can only play the price to the upside. Then you care. But if you're a day trader based on technical analysis, okay, it should be a long-term plan and it should be an opportunity for you to buy the dips. And the lower we go, the more aggressively you should be applying or adding to your positions, depending on what your strategy is from an investment perspective. So I just don't want people to get confused between the different terms. Day trader, investor, long-term investor, short-term investor, swing trader. Okay. Right. But we are WWE going short. Been back into my trading power. Right. Let me go through some comments over here, legends. Dewald, how does all of this correction account into the macro perspective on the daily time frame? Well, it's the, let's see over here. Okay, so from a daily perspective, let me do this. This is what I'm still expecting here from a daily perspective. So I'm only focusing on this structure, but I can zoom it out even further and show you the whole structure that I'm looking at over here. So from a bullish perspective on the daily time frame is I am still expecting a fifth wave to the upside. Either one more fifth wave or another 4 and 5 to the upside. But I'm being conservative over here, and I don't want to talk about the other 4 or 5 to the upside, but I'm being conservative over here. The question now is, okay, never a certainty, is that when you form a 1, 2, 1, 2, 3, 4, 5, 4, 5, okay, I'm still waiting for this 5 wave structure. The question has always been, well, Dewald, was this the low? Okay, for your fourth wave. And now we are busy with a fifth wave here to the upside. That is the question. Because the fourth wave, when you take a fib, and I know it looks a little bit messy, but when you take a fib from the low of 2 to the high of 5, you can see that a fourth wave has a target of the 0.382, which we did hit. And it has a target of the 0.5. So if this structure still looks bearish and not impulsive, like I've explained in detail at the moment, if the structure still looks corrective, that's what I basically mean. The structure still looks corrective. There's still a chance, okay, that could be the low. And we are going to go sideways in a corrective structure and still continue the fifth wave to the upside. What a lot of people don't understand, okay, and some of you might know this, is I want to take a blank piece of paper. When price pumps to the upside and it starts correcting and it makes a low and it starts correcting, it doesn't mean that that low is the end of the corrective structures, because people often look at the lowest point of the structure as the end of the corrective structure, because you could be forming a WXY, which let's say you do a WXY, and that damn Y can end in a triangle. Okay, but it's all part of a corrective structure, which means you form an A, an A, B, C, D, E, and you continue, of which that point was the end of the corrective structure. So a corrective structure can often go sideways without taking that low before it continues momentum to the upside. It is not the lowest point that is the end of the corrective structure. Yes, there is always the possibility that it does that, and then it's your Y that finished in a flat, and then it continues to the upside. Okay, then yeah, okay, that was the low, that was the end of the corrective structure. So all I'm trying to paint for you guys over here is it's not to say that the corrective structure is finished and we are building impulses back to the upside if you see that low finished. Okay, so translating this back into what I'm seeing here at the moment is this could be the lowest point, but you could still stuff around over here, and then you start building impulses back to the upside, where you basically completed an A, B, C, a W, X, Y, and the Y ended in a triangle. It doesn't necessarily have to claim the low. In order to claim that low, okay, what I'm seeing here on the price at the moment is you need to create a flat. And a flat basically means we need to create a B wave to the upside and another C wave to the downside, where you'll bounce perfectly on this trend, 50% Fibonacci, and you also have the range low over there. There is strong, very strong support by $83,000. So if we do create that ABC flat, A, B, C flat, that grabs the liquidity, okay? Yeah, I mean, it needs to start going up. Okay, it's yeah, it's just a game of probabilities. Okay, from a game of probabilities of perspective, I would have liked to see that low protected. And I mean, I have gone through the details of what I see here at the moment. Hope that makes sense. Okay, I hope that I try to explain it as best as I possibly can so that everyone can understand. Okay, basically, in order for price to still take this low, we need a flat. We need to go up first, then we can come down. That's what I'm basically saying. It needs to find strength here somewhere. It needs to go up first and then come down. That is a flat three-wave structure. A B wave is always a three-wave structure. Okay, so let me take this out. I know it gets confusing over here with all the numbers and stuff that I have, but if you have an A over here and you're now forming a B to the upside, 1, 2, 3, that's why I'm saying I wanted that to be the low, because maybe you have another 1, 2, 3, 1, 2, 3. Okay, so 1, 2, 3. That's why I'm saying the corrective structures for me still takes higher probability. And once you get to that box that I've highlighted there to the upside, the B flat box, again, it's very easy to calculate a B flat to the upside. You take your trend-based FIB from the high to the low, you drag it across, okay, you reverse it, and that is where my B, okay, I most probably didn't snap it onto the lows perfectly, but you can see between the 1.382 and the 1.236 is where you get your B flat target, or your very common B flat target. Very common. Okay, that could also be a B. Definitely, that can be a B. A, B, and now it's forming a C to the downside. Problem is there's no impulses there. So if this is an A, B, and this is C that's forming over here, because I can't see any impulsive structures to the downside, it has to end in a contracting. 1, 2, 3, 4, 5. Then you have an A, B, C that ended over there, and you can continue. Right, legends. I know it gets confusing, but it does get easier with time. You know, sometimes I even confuse myself and I need to make sense of the structures again. But that is basically what I'm seeing here on the price of Bitcoin, is that for now, for me, this still looks corrective. And there's a higher chance that this structure is corrective rather than impulsive. And we're just going to go on to 140,000. You know, we're just going to continue the bull market over here. Right. Let me go through some more comments. You explained it very well, just as well as everyone previously has. Glad I subbed. Thanks, Peter. Appreciate the comment over here. Angel, I'm new. I'm new here. This is a good explanation. Thank you so much. Hi, Dewald. Why are you counting 0.2? Why are you counting 0.2 top? I think 0.4 downside is Friday, 24th January high at... Okay, I didn't specifically include time as part of my analysis. Okay, I just put the structure in there in terms of how the structure could play out. If I'm understanding your question correctly. Mr. Junior, yes, join the Pro Legends community. Like, you know, Mr. Junior is saying over here, if you'd like to join our Legends Pro community, this is down in the description where you join our Legends Pro community, where myself and Andy provide daily analysis on the price of Bitcoin. I also look at some altcoins and altcoin requests. We have coaches dedicated to Discord that has over a 70% win rate on their trading portfolio based on all the trades that's been taken inside of Discord with good risk management. We have summarized research that gets dropped on a daily basis. I mean, there's loads of value. You get access to Andy's masterclass that teaches you everything you need to know from a trading perspective. He goes through harmonics, he goes through volume trading, swing failure trading. There's everything inside of there, right, Legends? This is where you join the Legends private community. Okay, and then remember, weeks up to 50%, not up to, you get 50% discount on your trading fees. Not up to, you get 50% discount on your trading fees only by using my link. Okay, you get up to $20,000 sign-up bonus, but the more you trade and the more money you deposit into your account, the more money gets airdropped into your features account. And all you need is an email and a password. Also, bluffing. Up to 100K gets airdropped into your account depending on how much you deposit and trade. Right, so these are the two exchanges that I use to do all of my day trading. Okay. Right, Legends, I think I have gone through all the probable scenarios and setups that I do see over here, okay? I think there's a high chance that Mr. Bitcoin over here is going to come and claim the low. Okay, and it's all just based on probabilities. Usually, you know, we often speak about this, especially inside of our Legends Pro community. We even have the 0.88 club inside the community. When you tap the 0.88, you increase the probabilities of taking the low. Now, the question is, okay, will I consider a long year? Yes, I will, because I do have support. Without even going into too much detail, is that if you take a Fibonacci from the low to the high of this structure, okay, we can take this one out. We don't need it. We have not tapped the 0.618 just as yet. And we all know, okay, well, if you don't, now you know. The 0.618, when you measure a fib from the high to the low, is usually a great area of support. I do like this pivot, and I like this pivot that has not been claimed just as yet. So if price had to dip below these lows and this low, okay, it dips below and it starts trading back above, that is where I will be interested in a long, because then I know where to put my stop loss. It's very important for me as a technical trader to know where to put my stop loss, because I do see the degen people, the high risk traders, that price drops, it drops, and they start entering, and it drops and they start entering, and then price sometimes, you know, it turns around. So let's say the scenario plays out, and then they post screenshots of them. Look at where I caught this trade. Okay, and I'm not impressed at all. Not impressed, because my question is always, if price is falling to the downside and you keep on adding because you want to catch the bottom, where are you putting your stop loss? How do you know it's not going to fall further? How do you know that it's slowing down? How do you know that it's finding support? You are gambling. That's all you're doing. And you might get lucky a couple of times, but at some point, price is going to keep on falling and you're going to keep on adding, and you're going to liquidate your position. Okay, so I need to see a sign of strength. I don't mind seeing this price action and having an entry over here with my stop below the low. I don't mind a stop loss, okay, if I see a sign of strength. Supported by bullish CVD, whatever your proof of support requirements are. RSIs, MACDs, moving averages, whatever you use as part of your trading strategy, I want to see proof of support, okay, before I will enter a long over here. Right, so that is my longing opportunity. A little bit further down, I have another longing opportunity, which I've already gone through. Basically, support above this highs over here. And then from a resistance perspective, I do like that box from a resistance perspective. You can see how beautiful, I mean, if I do this, okay, look how obvious it is. If Dewald just takes a little box like this. Look how obvious it is. Basic technical analysis where you have had resistance and you broke out. Support, 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 support. You lost it. Resistance, resistance. You broke out. Support, 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 support. And now you lost it. So quite an important level over here that has offered loads of support and resistance during this entire range over here. So it's quite normal that when you lose it and you do come back, that you are going to struggle to break through. Okay, so if I enter along over here, I take profit when we hit resistance. That is resistance. So this box now actually needs to be red because my resistance is red. So definitely if I do attempt along here to the downside, I have to take profits at resistance. Only when I see what I want, because price could continue, and then Dewald is not interested. I'm not interested in a trade as long as price is trading below my area of interest. Right. Shout out to mods who are always here. Same in Pro Legends community. They are always here to help you out. Thank you so much, Mr. Junior. I think we have no financial advice here. Mod in the house. I always appreciate your support. Shout out to the 0.88 gag. Yes, yes, yes. Everything is on a timed frame. Okay, not sure what that means. Rune is gone down. What should we do? I mean, yeah, I looked at Rune yesterday. I mean, what can I say, right? FUD. There's so much FUD around Rune that the level that I thought it was going to hold, it absolutely just lost here to the downside. Okay, nice little bounce today, though. So let's go here onto the 4-hour time frame. I mean, Rune has just absolutely lost the zone. But there's a lot of volume kicking in over here. I'm not sure if there was more FUD. So tomorrow when the researchers drop some more alpha, maybe they dropped the alpha already today inside of our community. I just didn't go through it yet. Okay. I think this dump, there was a lot of, there was news related. This dump over here, maybe more bad news on Rune. Okay. But, okay, I can't help but hammer on this point over here. That Legends, we've had this trend, okay? This little trend over here, oh, I've had it for such a long time, okay? Since 17 December, I've had this trend, okay? And I said, from a safe perspective, you want this trend to be broken. We didn't break it there. We're just continuing to the downside. So if you're still bullish on Rune, you wait for the break of this trend. You wait for the break of the trend and you want high time frame candle closes above, and then you want to see local market structure change. So that high needs to be taken if we don't just continue to the downside. So it needs to break out. It needs to take that high. It needs to smash that high. Now you have a higher high. Okay. You're starting to change market structure. Comes back down for a higher low, and then you continue the momentum to the upside. So this is where I will be interested in Rune again, but I am not interested in Rune as long as it's trading below the trend. For those of you that's been following me for a while, you know that I did have a swing trade open on Rune and I got stopped out. I didn't re-enter. Okay. I did add a little bit to my spot bags over here. And right, that's about it. That's because the spot bag is just long term. Right. I don't have stop losses on my spot bags. It's just DCA, DCA, DCA. I still think that Rune is an amazing project. They've got some FUD, and FUD usually provides for me good buying opportunities. The one concerning thing that I have to point out here for the long-term investors, including myself, is that when I look at the structure here on Rune, this low to the high, and I take a fib, and you can see we've claimed the 0.88, and even on the logarithmic scale, we have tapped the 0.88. So it does not look good for Rune at the moment. When you tap the 0.88, especially on the logarithmic scale, okay, you increase the probabilities of coming to take the low at 77 cents. What usually happens after you tap a 0.88 is one of two things. It chops and it falls. Or what I see play out often as well is it goes back up to the 0.618 and then it falls. So, right, need to pay attention here on Rune. It's not looking great here at the moment. Legends, right. Can you see Audi USD Junior? You are the most supportive legend around. Yeah, yes, you are. Mr. Junior is providing absolute loads of alpha and support here on the channel. Dewald, both you and Andy are saying it on every stream that you should never add to your position, but I have seen people doing it with success. Don't see the problem if you only add 0.2%. Yes, gamble, but what I do want to point out over here is, and I'll just leave your comment there on the screen, is that if you have a plan, for example, okay, you need to have a plan. So you're still executing according to your plan. If you believe, okay, based on your technical analysis, that price is going to turn around and claim the high first before it claims the low, you are now opening up a swing trade. That is not day trading. Okay, based on your swing trade, so based on your analysis, I'm not saying this is my analysis, but you could have a trading plan that states that based on my analysis, I believe, okay, that price is going to claim the high before it claims the low. You could open up a swing trade and add small little positions with every dip, okay? You buy a little bit here, you buy a little bit there, you buy a little bit there, but by the time price potentially turns around, you have now built a position, okay, with a clear stop loss at $88,000 is your stop loss, right? Speculating on a swing trade to the upside to go and claim the high again. I will not, if this is, but this is a plan, right, based on analysis. Okay, and this is now just done on the bigger time frame, because you could have also had a plan, for example, looking at this little structure over here, is that, and I often see people do this, okay, they look at this structure over here and they say, okay, I'm going to put my stop loss below this low, and as price is falling here to the downside, I'm going to buy a little bit, and 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 then price does this and it stops you out with no profits. So, but that was your plan, and your plan got executed, okay? Because often your plan includes a stop loss. And if your stop loss hits, you take the knock on the chin. And you could have a plan that states that all the dips that I'm buying, speculating on the highs still to be claimed, means that I'm not exposing my entire portfolio at 20x leverage. I am still exercising good risk management of where I'm risking 1 to 2% of my trading portfolio. Okay, so yes, if you are adding small positions, and if you do get stopped out and you don't lose half of your damn portfolio or 100% of your portfolio, by all means, execute your plan. But that is your plan. You are executing your plan. That is what's important. For me, my plan with the trading setup that I've just highlighted is my plan is a swing failure from the low. My plan states I am not allowed to add to my position as price falls, buying up the dip, buying up the dip. Why? Because I've often find myself in a situation where price continues to the downside. It just continues. And then at what point do you stop adding, and where is your invalidation? Because this was my plan. This was my plan. If price is trading below my plan, what on earth am I doing longing, trying to catch the bottom? What on earth am I doing? Because if you are adding over here, it means that that is not your trading plan. This is your trading plan. You are speculating on this structure to find a low and continue to the upside. But now you have invalidated this trading plan, because I can tell you now, this trading plan requires way less leverage and way less capital than this trading plan. This trading plan usually comes with higher leverage and tighter stop losses, because if you're adding over here based on this plan, you will liquidate your account, your position and your account by the time price hits these levels. Okay. So it just depends on what your plan is. Are you a swing trader or are you a day trader? Right. Cool. As long as you have an invalid, I think that's the most important point. Okay. As long as you have an invalidation. If you are a bottom catcher and you have a successful strategy built around it, so price falls to the downside. Let's say you are also waiting for this low to be claimed, and you have a strategy. Okay, I'm going to add. Okay, you just need to have an invalidation at some point, because if you're going to keep on adding and adding and adding and adding and adding and adding and adding, at where I just want to know, do you have an invalidation? Maybe you have an invalidation over here and you say, well, I'm going to keep on adding. Okay, and if I get stopped out over here, I'm out the trade. Like, as long as you have an invalidation where you don't add anymore, where you don't lose half of your portfolio or 10 or 20% of your portfolio. That's all I'm saying. Right, there are not many technical analysts on YouTube that hammer on risk management like myself and Andy. I know that for a fact, because I do follow a lot of people, or I have seen a lot of people's YouTube channels, and I'm very, very, very selective over who I follow from a YouTube perspective, because there's a lot of people out there that just like to show off stuff, but they don't really teach you what matters in trading. Okay, it is true. Okay. Drop a like for the alpha folks. Yes, no financial advice. I saw a comment here from someone. We have no life. Are we right? Legends, I know that on Friday I said I'm going to spend some more time on altcoins today, but unfortunately, okay, I think with the dump here to the downside, okay, people are way more interested in their in Bitcoin at the moment. And I just wanted to do a quick little update in terms of what can we expect for the week. Dominance, okay, it is inside of a bearish pattern here at the moment. It is inside of a bearish pattern, and maybe it's still going to chop inside of here. And at some point, we are going to get the breakdown. Maybe we create a double top over here, a double top, and then it falls down. Maybe it falls down from here. Who knows? Okay. But the signs are there that dominance is losing momentum. The signs are there. Okay. You've lost this bigger pennant. You've tried to get back up. You've failed. Now it's just chopping here to the upside in another bearish pennant, by the way. So at some point, it's going to lose steam and fall. And that is where we could potentially expect a little bit of our alt rally from our favorite altcoins. Right, legends, smash up the like for the education. Hope you guys enjoy. Remember, all the altcoins can be traded on weeks where you get 50% discount on your trading fees. I did go through ETH, yeah, but I mean, it's a nice little fake out. From a larger time frame perspective, okay, I'm not going to go into too much detail, but what I'm seeing over here is now, okay, if ETH claims this low, I will adjust my trend. Okay. And if ETH loses these lows, we most likely, okay, if ETH loses this low, okay, and it starts tapping the 0.88, you increase the probabilities that ETH is going to take this low. And most likely, if you look at the structure, I mean, it just makes sense from a technical perspective, is that you've had resistance, 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 and then you broke out. And the next area of support that I see, if ETH loses this structure and this low over here, the next area of support from a basic technical analysis perspective is the highs, where ETH comes down, and it finds support, and it potentially does a successful RS flip. You're flipping resistance into support, and ETH has not done that yet. It has not successfully flipped this resistance into support yet. It's broken out, and now it's coming back. So there's a chance that ETH takes that low and it dances around here at $2,700. And this is where you want to see ETH find support above the highs over here. Right. And that also aligns with, if I take the Fibonacci here out the way, let's just look at the structure. From the low to the high. Ooh, nice alignment with a 786, which is also your maximum bullish target. Okay, so this could be a 1, 2, which should be your maximum target. You don't want to dance around the 0.88. This should be your maximum target at $2,700 area. Okay, and then you could rampage in a 1, 2, 3 here to the upside. Right, but there's still a chance for now. There's still a chance that this low is protected because you have not tapped the 0.88 yet. Yeah, this level here is the 786. When you look at this structure, this is still the 786. So maybe it chops, and then it breaks through without coming down here. Right. Cool. Right, I know you guys have got altcoin requests. Unfortunately, I have run out of time. It is Sunday. I would still like to go and make some food, spend some time with my family, and just wanted to give everyone a nice little update here on Bitcoin so we can get ready for the week. So, legends, smash up the like for the education. Hit subscribe if you're not already a subscriber. And until the next one, cheers for now.